Bitcoin investors, 911,000 jobs gone, erased from the record. The Bureau of Labor and Statistics just admitted that the U.S. economy wasn't nearly as strong as they thought. Almost 1 million jobs that supposedly existed, well, they were never there. And here's the kicker. This isn't just about jobs. This is about the Fed, interest rates, and the global economy. And most importantly, Bitcoin. Because when the labor market cracks, the Fed panics. And when the Fed panics, liquidity flows. And when liquidity flows, well, Bitcoin benefits. Stick with me because we're breaking down what this revision really means, why rate cuts are now staring us in the face, and why Bitcoin, not crypto, is the only asset that's ready for what comes next. What's up, family? It's Coach Masi, and you're locked into the Daily Hodl. This is your home for Bitcoin and financial news, right here on Lead.Pray.Hodl. If you're stacking sats or stacking knowledge, this is where you need to be. Smash that like button, subscribe if you haven't already, and let's get ready to get this party started. All right, let's dive in. The headline number, the BLS, just dropped a bombshell revision that impacted the entire market today. U.S. job growth was overstated by 911,000 jobs over the past year. Imagine being that bad at your job to not know 1 million jobs were not there. That's the highest revision in history. That's almost 1 million jobs miscounted. Think about that. For the past 12 months, politicians, economists, and Wall Street strategists are all pointing to a so-called strong labor market to justify keeping interest rates higher for longer. Now we find out the strength was an illusion and labor market is not doing well. Here's what it means in plain English for you. The labor market wasn't as strong as advertised. Consumers may not be as confident or resilient as data suggested, and the Fed, well, just lost one of its key arguments for holding rates high. This isn't some minor adjustment. This is the biggest downward revision in history. And markets notice weak jobs means pressure on the Fed. Pressure on the Fed, well, that's all about liquidity. And liquidity talk is always leading to Bitcoin. Trust me on this. So what happens next? Well, I'm going to tell you. Markets are already buzzing. If you were on X or YouTube or Instagram, the market is buzzing. The Fed could cut rates as soon as next week. And before the revision, there was maybe a debate whether Powell and the team would actually cut them. I know they would. You knew they would because you watched this channel. After today, the narrative is shifting fast. Here's the bigger picture for you. Well, globally, we've already seen 88 rate cuts in 2025, according to Bank of America. That puts this year on track to be the fastest, or actually the third fastest global easing cycle in history. The U.S. has been the outlier, though, holding rates high while other nations are slashing big time. Well, now with the U.S. labor market cracking, the Fed has political and economic cover to pivot, and boy, do they need to. When the Fed pivots, the dollar weakens. Equities run, commodities react, and Bitcoin, historically, it rips. Well, let's cut through the noise. This isn't about crypto, it's about Bitcoin. This is the Bitcoin channel. Here's why this matters. Crypto itself is just a casino. Most altcoins are built to enrich insiders, not to protect investors. Wash trading, leverage scams, pump and dump cycles, it's all noise. Stay away from the altcoins, in my opinion. Bitcoin is different. It has no CEO, has no board, no central authority. Just math, code, and a fixed supply of 21 million. And really, it doesn't even have that. It's probably 5 million coins that are lost or Satoshi has them. And while the Fed can change rates overnight, Bitcoin doesn't care. Blocks keep getting mined. Transactions keep getting settled. And the network, it keeps marching forward. That's why institutional investors are looking at Bitcoin as a hedge. Not against just inflation, but against the unpredictability of the entire financial market, the financial system globally. Bitcoin thrives because it's predictable. Let's add another layer. While all this chaos is happening with jobs and the Fed, Bitcoin's hash rate just hit a new all-time high. Think about what that means. Mining is brutally competitive out there and very expensive. Miners wouldn't be investing millions of dollars into new rigs, energy infrastructure, and facilities if they didn't believe in the long-term upside of Bitcoin. A record hash rate signals two things. One, security. The Bitcoin network has never been stronger. Attacking it has never been harder because of the hash rate of miners. And then number two, conviction. Miners are long-term players. They're not chasing short-term hype. They're betting on the future of Bitcoin as a global money. So while the fiat world is revising jobs numbers, Bitcoin is setting records right in real time. Now let's connect the dots for you. Well, we got jobs were overstated by almost 1 million, which is incredible. The Fed is cornered, rate cuts are coming, and that's going to happen next week. And the global cutting cycle is already the fastest we've seen in years. Well, let me give you some Bitcoin fundamentals, from hash rate to institutional adoption. We have never been stronger, and stronger is good for Bitcoin. This is why Bitcoin is unique. It benefits in both directions. When things break, Bitcoin thrives as a hedge. When things are going great and you see growth rebounding, and Bitcoin thrives in that high growth asset category as well. Either way, it wins, and that's why I invest. So here are the key things I want you to track in the days ahead. The Fed meeting. Watch every word out of Powell's mouth. If the cut lands, Bitcoin sentiment flips bullish overnight. That's great for Bitcoin investors. And maybe you don't buy spot Bitcoin, you buy IBIT. Then we have bond yields. If treasuries fall, it's a signal that markets believe easing is coming. That's rocket fuel for Bitcoin. And I love rocket fuel. Bitcoin's technical levels, well, if momentum builds with the Fed cut, we could see upside acceleration quickly to new all-time highs. I believe by November. Don't get lost in the noise, though. Watch these key levels and catalysts yourself. Family, here's the bottom line. The U.S. just admitted its labor market wasn't nearly as strong as it claimed. The Fed is now in the hot seat. The rest of the world is cutting rates, and Bitcoin is sitting in perfect position for all of it. This isn't about altcoins. It isn't about hype. It's about the one asset that continues to prove itself every single year, every single time. You guessed it, Bitcoin. So I want to hear from you. Does this 911,000 job revision make you more bullish on Bitcoin, or do you think it signals broader weakness that could drag everything down? Drop your thoughts in the comments. I promise you, I read every single one, and I will reply back to you. Next, if you got value from today, smash that like button, hit subscribe, and share this with someone who loves Bitcoin news as much as you do. Remember, this is not financial advice. It's for education only. That's your Daily Hodl. Stay sharp, stay disciplined, and as always, Lead.Pray.Hodl. I'll see you in the next one.